Good morning, everyone. Darius Dale here to present our macro minute for Monday, December 13th, 2021. Starting with markets, we have stocks up this morning, commodities mixed, crypto down, dollar up, global bond yields down. Big movers on this morning. Germany's DAX up 1%, Bitcoin down 2%, Ethereum down 3%. On the economic front, rounding out Friday's U.S. economic data. So going back to the November the November CPI report, we've been looking at everything on a seasonally adjusted annualized rate basis, just given all the sort of noise around the base effects. And what we saw is a pretty ubiquitous decline in inflation momentum across all categories. So headlines slowed to 9.8% on a SAR basis, food slowed to 8.9% on a SAR basis, energy slowed to 51% on a SAR basis, core slowed to 6.6% on a SAR basis. Median CPI, which I think is one of the most important metrics to follow, that's slow or to slow to 5.6 on a SAR basis. And then lastly, OER slowed to 5.4% on a SAR basis. And the reason I bring that up, taking it to the chart here, so again, we're looking at everything on a SAR basis. There's a lot of noise in and around the base effects, particularly last year. The SARs have to keep growing at the same. If the SARs keep growing at the same rate, the year-over-year rate will slow down as a function of the base effects. So the SARs have to keep accelerating for the year-over-year rate to keep accelerating really into 2022. And obviously, our forecasts continue to be on the other side of any acceleration in inflation. And so as long as we continue this sequence, it's very likely that we're going to see a peaking and rolling of inflation. And that's obviously what the bond market has been queuing up on. It's another thing consumers are queuing up on. Looking at Friday's December University of Michigan consumer confidence data, the headline ticked up to the highest since October. That was at 74.4. Current conditions ticked up to 74.6. That's also the highest since October. And then expectations ticked up 4.3 points to 67.8. That's also the highest since October. And part of the reason we think we saw some reprieve on the consumer confidence front, because again, it had been crashing. We saw some unchanged statistics with respect to expected price changes over the next year. That came in at 4.9%. That's tied for the highest since July 2008. And then the expected price changes over the next 5 to 10 years, that came in at 3%. That's tied for the highest since September 2013. And so you're starting to see a peaking of consumer inflation expectations. And for at least a month, that was positive at the margin for consumer confidence. With respect to today's probable range setups, you got overbought signal in the Shanghai Composite, oversold signal in the VIX, and the dollar versus the Mexican peso. S&P 500, that's bullish FAMs with 3.5% downside versus 2.9% upside. WTI bearish FAMs with 16% downside versus 4% upside. Bloomberg Dollar Index, bullish FAMs with minus 0.3% downside versus 1.3% upside. 10-year Treasury yield, bullish FAMs, minus 6 basis points of downside versus 27 basis points of upside. Bitcoin neutral VAMs, minus 8% downside versus 20% of upside. Ethereum, that's also neutral VAMs, minus 10% downside versus 23% of upside. And then lastly, gold is neutral VAMs at minus 2.5% of downside versus 2% of upside. So with that, Darius Dale presenting our macro minute for Monday, December 13th, 2021. Best of luck out there this week.